What if I told you one man quietly spotted massive wealth creators while most investors were busy chasing stock tips? He identified multi-bagger stocks like Page Industries, Sarah Sanitary Ware, Thomas Cook in their early stages of growth and created massive wealth for investors. Meet Madhudan Kela, one of the most successful mutual fund managers in India. He delivered strong and consistent outperformance, especially in mid and small cap companies. Kela's roots are humble. Born in a middle-class family in Kurud, Chhattisgarh,
मेरे पिताजी एक फार्मर हैं और उनका छोटी सी कपड़े की दुकान थी उस समय। अब इवन दो मैं हिंदी मीडियम में पढ़ता था, मैंने एक बहुत बड़ा मेरी स्टेप जिंदगी का लिया कि मैं बॉम्बे आऊँगा और यहाँ इंग्लिश मीडियम में एमबीए पढ़ूँगा।
Kela went on to do his Master of Management studies at KJ Somaiya Institute in Mumbai. He started in equity research at CIFCO and Sharekhan. Then, in the year 2001, he joined Reliance Mutual Fund and rose to become its chief investment officer. Under his leadership, Reliance Mutual Fund became a powerhouse, delivering outstanding returns. He focused on stock picking through business fundamentals. No speculation, no shortcuts. Now let's decode Madhusudan Kela's investment framework. If you want to model his style, here's how his decision tree works. Before looking at the company, he scans the industry like a battlefield commander. Which industry is growing fast? Where is demand exploding? For which industry is the government making favorable policies? Where is the consumer shifting naturally? The most important quality Kela looks for in an industry is. If the answer is no, then Kela immediately drops the sector without any emotions or bias. Madhusudan Kela invests where the industry in which the company operates in has favorable tailwinds. A booming industry lifts every company, but Kela isn't interested in everyone. He wants the killer company for investment. That's where the second filter ticks in. Moat. Economic moats, or moat, is a popular term that describes a company's ability to maintain a competitive edge against its rivals. Aim is to protect and secure the company's long-term profits and market share. This term was first made popular by Warren Buffett, who said that moats protect businesses from their competitors.
What we're trying to do is we're trying to find a business with a wide and long-lasting moat around it, protecting a terrific economic castle with an honest lord in charge of the castle.
Different types of moats like economies of scale, brand, cost advantage, large distribution channel, network effect, patent. Madhusudan Kela doesn't just want a moat, he wants a moat that grows over time. If a company can deepen its cost advantage, widen distribution, build adjacent products, or replicate success across regions, that's when he bets big. Madhusudan Kela believes that even a great industry and great business will collapse under bad management. Before even looking at the financials of a company, Kela studies the top management.
You first want to understand what the management is, because a very good company, very well run, but an absolute dealer management where there's no fire, there's no real understanding, there's no real ambition, you can be in a difficult spot. Okay. Similarly, an extremely aggressive management which has no sense for capital allocation, which has no sense for how much risk should you be taking in building a business. And a fantastic management, but you can be again get stuck.
Kela has a simple philosophy. A weak promoter can destroy a strong business, but a strong promoter can build an empire from nothing. Kela lays particular emphasis on the capital structure of a company. A company with a clean capital structure survives economic downturns and has the resources to grow fast. Kela looks for companies that are conservative with raising capital, have low debt, and good interest coverage ratios. While looking at valuations, Madhu Kela doesn't go for low-quality businesses available at low PEs. He prefers to invest in high-quality growth companies, even if they are available at higher PEs. Retail investors obsess over numbers on screen. Kela obsesses over what numbers will look like 5 years from now. If future earnings justify today's price, valuation is just noise.